So welcome back to the Mobile Mailbox Money Mastermind here today. I'm Alden Guajardo, President of Silvercrest Opportunity Fund, Vice President of Win Mobile Homes and Mobile Mailbox Money, and we provide investors passive returns backed by performing collateral in a note investment strategy, cash flowing like Warren Buffett. I'm here today with my cohorts here in the business. We've got a tremendous amount of transactions going on, from seller finance notes to construction lending opportunities short term, as well as fund investments pending accreditation. Today's brought to you by Silvercrest Opportunity Fund. You can invest today and start earning interest in as little as a 30-day program at 10% return for a 1-year term paid monthly, 12% for a 3-year term paid quarterly in an income-oriented investment strategy. I'll just have my kind of cohorts introduce themselves here this morning, get acquainted for the people that are new to the channel. Sonny, if you could just introduce yourself for the viewers that don't know you.
Sure. I'm Sunny Finkel. I am the Investor Relations Specialist and Loan Compliance Coordinator to the stars. I have experience as a realtor and mortgage broker in the real estate industry, and I do a lot of the loan compliance coordinating for the agents who bring their borrowers that are looking for notes for owner carryback financing, and I'm happy to help you with getting a better look at the borrower that you would be getting into bed with if you purchased a note. And I have a couple ideas for you this time, Alden, about the frequently asked questions.
Hi, this is James Guajardo.
Hey, James. Oh, I just muted him. Go ahead, Sonny.
I'm good. If you want to come back to me with your frequently asked questions question.
Yeah, this is James Guajardo, President of Win Mobile Homes. My voice is a little shot right now, so I'm going to keep it limited. But hopefully we'll provide a lot of insight today on the opportunities for low-cost housing.
And we've got Sean Gibson today here as well. Sean, if you could just introduce yourself for the viewers that don't know you. If you're available, Sean Gibson. All good. So we'll move on. You know, we've got a tremendous amount of transactions going on right now, delving into efficiency optimization with artificial intelligence to video generation to all the above. So kind of reorient my screen here. We've been on a journey with Manus and a few other AIs, but check this out.
Show you exactly how we turn a manufactured home into a cash flowing asset. We acquire and improve homes like this in professionally managed communities, not to rent them, but to structure them for long-term payments. We place a qualified buyer into the home, and instead of a bank, we become the lender, structuring payments they can actually afford. But we don't just hand over keys. We verify income, review background, and make sure the borrower can perform. Then we create a promissory note, a legal agreement where the borrower commits to making payments every month over time. And that note is secured by the home itself. And so now you've got a real asset backing a real payment. Once that's in place, the note produces income. And now it becomes something you can package, sell, or borrow against. That's how we create structured, collateral-backed cash flow without dealing with tenants, repairs, or day-to-day management. One home, one note. Repeated at scale.
So that's just a piece of marketing material and kind of shows you a little bit about what AI is capable of at the end of the day. It's definitely interesting. If you're not implementing AI into what you're doing, you're going to be left behind at the end of the day. So we're adapting with the market. We're adapting with the tools that are available. We're looking at leveraging AI to raise international capital, and data scrape and all the above. But today is mobile mailbox money, right? So if you're unfamiliar, mobilemailboxmoney.com, we post our notes available on the website, and our site is back up. We had some challenges recently, but we'll be updating the notes that are available here today as we discuss them. But today I wanted to walk you through how capital actually moves through our model from construction lending all the way to long-term cash flowing notes. We'll start with what most people don't see at the front end. We're originating short-term first lien construction loans. For example, we've got deals right now at 50, 50, and 60,000, producing monthly income during the rehab phase, all in first lien position. So capital is working immediately while the asset is being improved and stabilized. Now, here's where the shift happens. Once the property is complete, we don't just sell it and walk away. We convert that asset into a seller financed note, like the one I talked about last week, La Montana, and we'll talk about that here shortly. But that home, La Montana, at a $96,500 note, producing about $1,200 a month on a long-term amortization schedule, still backed by the same housing asset. So instead of a one flip, we've now created a financial instrument. This is the full cycle: deploy capital, build, stabilize, create note, and cash flow. You get your back office view of how we create institutional level cash flow for investors, whether accredited or non, one note, one investor investing in the fund. These aren't luxury buyers. These are people who need a place to live. Important to understand that. They stay longer, they pay consistently, and they protect the asset. So what do you actually end up with? A first lien collateral, a borrower with skin in the game, defined payment streams, and income backed by real housing. From an investor standpoint, you have options. You can participate in a short-term construction lending component on some notes that we'll talk about here shortly, some long-term notes that yield above average returns in comparable real estate investment strategies, or structured fund exposure through Silvercrest Opportunity Fund. And that's really the key. We're not just buying real estate, we're creating income generating paper, right? So when you see something like 50,000 on a construction turned into 96,000 for $1,200 a month, that's not just a deal, that's a repeatable system at the end of the day. So that's exactly what we're breaking down today. Let's kind of jump into some deals, right? It's the live deal flow market. We're here today on the Family Bank. Let's see what is on the docket today. Let's see if I can get my screen right here. Perfect. Okay, so lot number 30, let me just pull up my notes. In Brentwood West, coincidentally, in this same park, we have a home that's actually closing, I think today, same park. That lot 348, and I'll get to that in a minute, is a $99,000 exit. So we'll have a $100,000 transaction going on today. But lot 30 in this same park off major cross streets of Val Vista and Broadway in a gated 55 and older community. This home we've acquired. We own the property currently in an institutionally owned park by Warren Buffett, by Sun Communities. Lot 30, we've done a rehab on this home. I can't remember what we acquired it for. I wasn't the contact for the acquisition, but we put probably 10, 20,000 bucks into this property, going through all electrical and plumbing. We've already kind of rehabbed the home and it's up for sale currently, but we're looking for a leverage partner. In other words, a construction lending loan that they'll participate at a $50,000 balance, secured by first lien on this property for a 1-year term, interest only at 416.66, and likely sometime within the next 2 or 3 months will exit via seller finance, just like lot 348. So if I go here, still getting used to managing all these screens, give me a moment. Lot 348 just sold at $99,000 in the same park, likely around the same square footage. It had a little bit more upgrade of the kitchen. The kitchen was a very nice kitchen, right? But in the same property, we've got comparable value, comparable comps. This individual who lent on 348, that's closing today, not lot 30, lot 348, they had a construction loan on the property for, I think, like around 70,000, 75. The buyer go ahead. 80,000. Perfect.
Mhm.
At 80,000, he came up to the unpaid balance and is now today being placed on a first lien seller finance fully amortized loan. He'll actually participate in the seller finance rate at a 15% yield over a 20-year term. That's 1198.28. So he lent 80,000 for the construction loan. It likely took around 6 months from what I remember for us to enter and exit. And within the 6-month period, he came to the table because we brought a seller finance transaction from the unpaid balance of the construction loan to the unpaid balance of the newly originated seller finance note, effectively helping us acquire more homes, but also now getting a first right of refusal on the note that came available on this unit, as you see before you. That's the same equation here for lot 30, right? So let me just be clear. I'm switching back here. Lot 30.
What was really exciting for the investor who bought the note for 348 is he was the investor for the construction note, and he made so much money in his interest payments that when it came time to convert to the 100% assignment, he didn't have to add more money. He'd already made enough.
Yeah, so there's some deferred interest equations, potential for a little bit higher rate that helps us on cash flow. But that's Brentwood West, lot 30, $50,000 position. We acquired this home from an individual that was, I think, going to assisted living, something of that nature. It's a lot of those stories of distressed sellers and not too bad of a home, really just aesthetics more than anything. But that's lot 30. Let's move on. Lot 76 in Brentwood West, same community, actually. In Brentwood West, we have got an 8-year track record. We've done 100 homes probably in that park, maybe off those cross streets, about 100 homes. In that park is likely around 20 homes that we've bought, rehabbed, and resold with a 2% default rate. This home is in more of a construction phase, right? That property we just looked at was already pretty much turnkey. And we used our own capital in order to do that. So same park, same beds and baths, lot 76 Brentwood West. Okay, $50,000 position at $416.66, paid monthly, $416.66. The 12-month term. These are a little bit conservative of loan to values. Normally we'll get a little bit higher, about 75 to 80% loan to value. But we're offering, so a little bit more secure positioning today, given our, niche market in that community. We feel comfortable with the exits that we've been exiting at over an 8-year period. So kind of provide you a little bit of background. So lot 76 currently immediately available. And remember, the chat is open actually, and Sonny replies to that. Don't hesitate to ask any due diligence questions, maybe how we find these homes, what we actually do on the properties in most cases, or how we underwrite buyer borrowers. And Sonny, if you see a question that's a great one to talk about, please bring that up. So that's lot 76, again, in a 55 and older community. Brentwood West is one of the nicest mobile home parks in 55 and older communities here in the Valley. They've got a gated community. They've got water fountains throughout, grass. To have grass in Arizona is virtually non-existent. So it just shows the money that they pay to upkeep the property. Indoor pools, indoor jacuzzis, pickleball court, neighborhood style living, opposed to the commonly misconceived representation of a mobile home park. So we'll move on. This is Kyrene and Baseline off in Tempe. Kyrene and Baseline, this is a 3-2 that we've acquired. We had a buyer borrower actually on this home, and they've been defaulted. They bought the property, I think, under market value from what I remember at like $65,000. They put a $5,000 down payment, and within, I think, 3 months, the individual lost his job and something happened with his wife. and life events happened at the end of the day, and the lender on this property happened to be us. We hypothecated this note, so pledged an asset being a loan, a seller finance note, in order to garnish capital investment. And on the buyer borrower's non-performance, within 40 days of non-payment, we issued a pay or quit, a eviction notice. He's officially been evicted, and a writ within 40 days. So we've reacquired this property, and now we're putting it back on the available market. Kyrene and Baseline, Ellsworth and Broadway. What's a 3-bed, 2-bath like this actually go for? $99,000. Pretty much all day. In most cases, we could go as low as 85 to sell it quickly. But as a 19, I think it's a 19. Here, let me just click on the site real quick. It's a 1990s property from what I remember. Let me just see here real quick. It's 1,000 square feet, 3-bed, 2-bath. And it doesn't say it on here. That's okay. So at 3.2, 85,000 is an easy sales price for us. We could do some additional rehab if we were wanting to gain that extra 15,000. But really, if we repossess an asset and still make the payments to the investor, that's the important key here to understand. At the end of the day, that hypothecated investor either gets notified or doesn't get notified, depending on how communicative they want to be. At the end of the day, most people just want the payment, and that's why they hitch their cart to us, because we end up guaranteeing the payments in that situation via hypothecation, because we own the position and we took the risk in order to repossess the home and potentially make additional profit. So this Chaparral Village, lot 125, family parks, or some people only want to buy notes in family parks. Some people only want to buy notes in 55 and older communities. This is a family park, majority of the marketplace, that if and when something were to happen like it has, we have the availability of an more open buyer borrower marketplace and potential for an ITIN borrower, which is the earliest paying, always on time payment you will ever receive at the end of the day. So that's Chaparral Village, lot 125, 60,000, paying $500 a month for a 12-month term, likely to mature within 3 to 6 months. That's a hot park. We've done 20 homes in there. It's $2 million that we've done in that one park. With a 2% default rate. We sat down with CalAm Properties actually yesterday, the number 3 at CalAm Properties, and he let me know confidentially that Ivan Carno, who owned and what is one of the biggest attorneys in Scientology, actually owns CalAm Properties. They're $1 billion business. I thought they were like 100 million, but they have $1 billion in their portfolio, and we're helping them. At the end of the day, that comes with potential income generating opportunities, so getting kind of the open door availability of products within their portfolio here in the Arizona market, but also other markets as well. Not to get sidetracked, this is for passive investors, right? So that position's immediately available, 60,000. 50, 50, 60, we got $160,000 in short-term positions at low loan to value potential on this program. Our exit strategy is bulletproof via seller finance, and the proof is in the pudding. Went over La Montana last week. I had 2 investor callbacks last week. One, just has too much on his plate, and the other will be talking again tomorrow once he gets that full collateral file. A full collateral file comes with the buyer borrower's underwriting, financial criteria, pictures of the property, secured picture of the title, right? So proof that we own the home, and upon closing, obviously, you'll get your lien position on that transaction. And I'm trying to think. The sales contracts, the promissory note, and the automatic funds transfer services contract. So this lot 129 is a perfect representation of that. We went over it last week, but I'll go over it again, right? Lot 129 here at an unpaid balance of $96,500, paying, I think it's $1,199 a month, $1,200 a month for 20 years, first lien seller finance, fully amortized over a 20-year term, immediately available. This property, I can either sell the whole note and you make the full yield and either use your relationships to raise the capital to buy a position like that because of the yield and what people are really not getting out in the market at the end of the day. Or I can hypothecate this note, which is like what I talked about on lot 125, where Win Mobile Homes borrows against our performing collateral, right? And guarantee the position, give you a 1-year term at a double-digit interest rate. What does that look like on 96.5? At 96.5 for a 1-year term, that interest-only monthly payment is $804.16. So you make $9,000 a year or more in passive cash flow in first lien position with a qualified quality operator with branding across Arizona Real Estate Investors Association, Business Network International, and every major social media platform, or you buy the whole note for a $1,200 monthly cash flow with a quality collateral underwritten by a borrower, and once expressed interest, we can send the full collateral file. Obviously, there's some sensitive information in there. Otherwise, I'd be happy to show it to you all. But Sonny, I think you processed the transaction on this. The buyer borrower had some pretty strong criteria, correct?
Yes, she does.
So, they got their stamp of approval through 2 entities, third party, not even my underwriting staff, right? At the end of the day.
Congratulations letter from Dodd-Frank Compliance.
And who else did they get approved through?
Through us.
Through the
and
park.
The park.
Correct. So we're not just sitting down at a table, us on this meeting as capital investors looking for a high return, trying to do a loan. These people went through 2 rounds of third-party underwriting. If they say yes, it's a yes. If they say no, really, we make a decision at that point if it's satisfactory or not, depending on their income, and what the story is. But this got the full approval, ability to repay, Dodd-Frank compliance, literally a bank quality position at the end of the day. So that's lot 129. That could be absorbed in the fund. The fund currently has 25 positions working and making $19,000 a month on 1.5 million. So do your math, and on your 1% ratio of what that looks like. And we're actually outperforming the market currently, and to see the other major industry magnates like Warren Buffett come into owning a lot of the market in manufactured housing, from the parks to the communities themselves, and that kind of leads into our presentation that we'll get to on next week on Wednesday at Business Network International. Business Network International is one of the largest referral-based marketing networks in the world, and actually BNI Connectors is one of the largest on the West Coast. We've got 90 business professionals in our group. We have trades and other associates that own some of the largest roofing and construction companies, AC companies, insurance agencies, and all the above. So I'll be giving a 7-minute presentation to my chapter that we've received upwards of $3 million in transactions over the past 4 or 5 years. Actually, this is my 5th year in there. So from raising private capital to doing sales and buying homes in Business Network International. That's Orange Tree Golf Course, Wednesdays at 11:15, every Wednesday in most cases, unless it's like a holiday or close to spring break or something of that nature. If you're in the Valley, coming to Business Network International next week is free. Happy to court you out and maybe introduce you to some of my contacts if you have a small business. But you're more than welcome to come. I'll be filming that and vlogging the whole presentation next week on Wednesday. So this presentation kind of outlines why manufactured housing is such a much needed solution out in the market. And in most cases, because of the banking dilemmas, and non-availability of credit within manufactured housing, really creates a once in a lifetime generational opportunity. Traditional banks refuse to write mortgages for manufactured homes on leased land, cutting off access to capital, which limits the actual solutionship, not the right word, but that the availability of this at scale, and to have a perfect ecosystem of $430,000 medium home prices nationally, not only in Arizona, I think it's a little bit more nationally. But that's how you position yourself to solve a much needed problem at the end of the day, make a higher than average return, and do it all compliant, So to know that we're not just the lender, remember that, we provide our investors a fair amount of bells and whistles, far above what anyone would receive in any comparable real estate investment strategy. You're in a first lien senior debt position outside of complications and trying to figure out appreciation. And some say there's going to be little to no appreciation over the next 5 years. I don't have a crystal ball, but that could be accurate at the end of the day. So to find an institution newly institutionalized, our fund is 2 years into performance. We're looking to raise $10 million in the next 1 year to perform in these notes. So as we cultivate our private credit strategy, cultivate our licensed dealership of manufactured housing, license 8670, that just provides you that much more safety, stability, security within a Warren Buffett investment strategy. Warren Buffett owns Clayton, Cavco, 21st Mortgage, Sun Communities, Vanderbilt Mortgage, all around manufactured housing. And some may call him the Oracle of Omaha. To follow in footsteps of industry magnates, take his word for it. He's showing where the market's going at the end of the day. Our two vehicles today for investors, mobile mailbox money is non-accredited investors that buy one note with one investor, or we pledge that one note with one investor hypothecated, and we cash flow together. That's our education, non-accredited financial freedom channel that's on YouTube, Facebook, also TikTok, and a couple others. Silvercrest is the fund, that's accredited investor, 506C Reg D accredited investor offering that provides bank quality stability outside the stock market. And these notes are actually qualified products for IRAs. Your IRA, your solo 401k are actual tax deferred or tax free accounts that you can use depending on how they were set up and which custodian you use to cash flow in these positions, creating much more of a return at the end of the day. So that's obviously a retirement strategy, ultimately as a vehicle, but tremendous amount of individuals coming to the table with IRAs. Sonny, what's a common hardship we find with investors who come to the table, maybe new, who have a new IRA? What would you have to say about that?
The IRA companies are just finally getting on board with the process. I have had to personally educate so many people at work for IRAs about what the documents they really need, because they always ask for the wrong things, but it's gotten a lot better. And I've dealt with a lot of different ones. Nate at Directed is the best if you ever need to figure out what IRA company to use. But the hardest part is just to make sure that we align the contracts with the correct information that gives the IRA company as well as the borrower's information in the contracts, and then the proper documentation that they need in order to approve the funding. And it usually takes a little longer than we like to do the funding, but we work it out somehow.
If someone has capital in their IRA today, and how long does it take to transfer? If it's in the IRA liquid, maybe they got to pay off or something of that nature. How long does that take?
I'm working on one right now that the IRA company is telling me it's only going to take 3 to 4 days. which I'll believe when I see. I would say it takes probably more like a week to 10 days.
So, great clarity provided here today. Unfiltered value. We do this for free. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There's actually 12 investors actually on the call today. I think that's the most that we've had in recent time. We're getting a lot of interaction today, a lot of hearts, a lot of thumbs up. We appreciate your interaction. We do this for you. At the end of the day, I don't do this for me. I'm not that conceited. At the end of the day, we provide a back office view for free, literally for free, gold out in the marketplace. Hard to find. We're doing it in the want for transparency, trust, why to establish those two so much? Because people do business with the people they know, like, and trust. And if I can get on here every week and just spew due diligence on transactions because of our massive amount of deal flow, I'm going to continue to do it. That's not only why we do that online across every major platform and stream it live for free. We've also now associated Silvercrest as the main corporate sponsor for Arizona Real Estate Investors Association. We hold the industry category for Business Network International as the manufactured home business, buying, selling, seller financing, and raising private capital for these positions. But also do this mastermind once a week for free every Thursday at 1 o'clock Mountain Standard Time. We went over a tremendous amount of deals today, from short-term, long-term, some potential maturity within 6 months, a couple really interesting opportunities. Please don't hesitate to reach out. We do this every week. I put my phone number in the chat, actually. We had some kind of private chats going back and forth. Good to see some interaction. We appreciate that today. So, one step closer to financial freedom. What do we call that? Mobile mailbox money. Call today. There's an immediate sales associate. Whether you're wanting to buy a home to rent out, we got those in Long Haven. I didn't even talk about those. We've rented 3 of them, I think, in the past 30 days. We're getting down to the wire here. So, obviously we're super excited about getting those homes rented. But if you wanted to buy a rental, that could be a $44,000 purchase price. And we're renting those homes out now at a reduced price of $1,400. So, nice, decent cash flow on an under $50,000 position. We got $50,000 construction loans, a 96.5 note. That's upwards of $500,000 in opportunities immediately available for you to start cash flowing and earning interest in as little as a 30-day program. We appreciate you being here today. We'll see you next week. Looking forward to you reaching out. We got 2 people viewing live. We appreciate you viewing here today. Please don't hesitate to reach out. Normally, I share this across 50 to 100 different Facebook
I'm still
groups.
on for the next few minutes. If anybody has any questions. I'm
kind of banned on Facebook groups right now because I share so many. So hopefully I'm not spamming you. Once in a lifetime opportunities. Call today.